Welcome to Nordens TV. After our last video, we had a lot of interest from you guys about the new property legislations that were coming in. So we've invited in Terence from the 1E group, who are property tax specialists, to come in and discuss this with us. Terence, thank you for coming in.
Pleasure, thank you.
Can you give me a background on yourself and the company?
Certainly, so I work for 1E Group, who are the UK's largest property taxation experts. We help businesses and investors make sure that they run their business affairs as tax efficiently as possible, including implementation using council drafted documentation.
So if there's someone out there that has a portfolio of properties, they can bring you guys in to work out a structure for them to be set up tax efficiently.
It's where we can get involved to provide the tax advice as well as the implementation to make sure that the structure is as tax efficient as possible.
That's brilliant. So there are a lot of new changes that are coming in from April, which I think everybody is a bit frightened about. I mean, there's probably so many, but I mean, I know for a fact that wear and tear is changing and mortgage interest is changing.
Yeah.
Can you give me some information about that?
So the two main changes, the two main headline changes are, first of all, wear and tear allowance, which was a 10% reducer on your rental income that you receive every year. That's now being scrapped from the 1st of April and replaced with a renewals allowance, which effectively means that as and when you buy a replacement piece of furniture, whether that's a bed or a wardrobe, I can then claim the tax relief on that rather than an overall 10%. The second one is the mortgage interest rates, which traditionally has been reduced by your marginal rate of tax. So whenever you were a 40 or a 45% taxpayer, it would be deducted as a 40 or 45% relief. That's now changed in that it's going to be limited to a 20% relief. And what we can do is go through an example of how that will affect current landlords, but also prospective landlords as well, because it can affect those basic rate taxpayers, and we can go through that in an example. I think that's probably best.
Okay, that sounds good. So Terence, with our lovely Nordens red pen, can you show us how it currently works?
Certainly. So at the moment, if you take the example where you've got rental receipts of 20,000, and we're assuming there's no other expenses on this, we then at the moment deduct the interest, and we'll assume a £15,000 interest only mortgage, leaving us with 5,000 subject to tax. Now, if that's taxed at your marginal rate at 40%, it means that your tax bill is £2,000, leaving you with £3,000 net profit. Now, that's the way it currently works. The way it will work is you'll assume that we have the same income again, but rather than deducting the full 15,000 as we previously did, we'll actually tax the full 20,000 at 40%. which gives you a tax bill initially of £8,000. Now, the way the basic rate relief will work is to say, well, with the 15,000 interest that you've paid, you'll get relief at 20% on that. So 15,000 at 20%, which gives you a £3,000 tax relief. Now, if you take your original tax bill, deduct what the tax relief is, it means that your new tax bill is £5,000. Well, in that scenario, it actually means that you're walking away with absolutely nothing, because you've got your 20,000, you've paid your £15,000 interest, and I've now got a £5,000 bill, which removes any profit that I originally had beforehand.
And you have ways and methods of getting it back to an area where you can actually make profit from it again.
Yes, definitely. So obviously this is a huge change, and it has a massive impact where you've gone from £3,000 a year profit in this example to nothing. There are a variety of different options that you can look at that we can obviously do within a bespoke review.
Okay, brilliant.
Thank you.
So now we've gone through the buy-to-let information, there are changes coming in with the stamp duty. Can you give me more information about that?
Yes, so in the December statement, the Chancellor announced a 3% surcharge to stamp duty whenever you buy a second house or an investment property. This will come in from April 2016. Unfortunately, the legislation itself hasn't yet been released, and we don't know the exact details of how that will work, but it's certainly something to bear in mind if you're looking at growing your portfolio over the coming months.
But you have the facility to deal with this in an efficient way.
There are certain ways in which we can help with stamp duty. It's one that you can't directly avoid because HMRC in the past have directly targeted stamp duty avoidance. So you have to be very careful if someone comes around offering stamp duty schemes to avoid it. They will be looked at closely by HMRC. So
with the stamp duty rules coming in, would buying a property before the 1st of April isn't it? Would that make sense to do then?
It can do. One of the very big difficulties with that is obviously completing before the 1st of April. We're obviously time constrained now in that we're already in March. There's not that much time to actually get a conveyance completed.
And it needs to be completed, not exchanged. The deal has to go through.
It has to be completed,
okay.
Yes.
Okay, fantastic, thank you. As you can see, there are options going forward, even with the new property tax legislations coming in. So do get in touch and see if we can help you. The number's coming up on the screen.